Hello, my name is Jason Mercer, TREB's Director of Market Analysis. We are now more than 3/4 of the way through 2015. So in this latest installment of the Market According to Mercer, I not only want to give you a final forecast update for 2015, but also provide you with an initial sense as to the outlook for home sales and price through the end of 2016 as well. To set the stage, let's first take a look at what we've experienced so far this year. In terms of home sales reported through TREB's MLS system, we are on track for a record year with approximately 100,000 transactions expected for calendar year 2015. Year to date, through the end of September, total residential sales amounted to 80,267. This result represented an increase of over 9% in comparison to the same period in 2014. We've seen sales growth across all major home types. The strongest growth year to date was experienced in the condominium apartment market segment. This was due not only to strong demand, but also to relatively strong growth in listings. And that represents a nice segue into the supply side of the market so far this year. Total month-end active listings have been consistently down on a year-over-year basis this year. While we have recently seen annual new listings growth outstrip annual sales growth, this trend has not been sustained for a long enough period to see sustained growth in inventory levels. The result has been a marked downward trend in months of inventory this year, both for low-rise homes like singles, semis, and towns, and for condominium apartments as well. So just to refresh, months of inventory, or MOI, is calculated by dividing active listings by sales, with the notion being that if we did not see any more listings, this is how long, on average, it would take to deplete standing inventory. So generally speaking, when MOI declines, there are fewer listings for would-be buyers to choose from. In other words, there is more competition between buyers. So more competition usually translates into stronger rates of price growth. So stronger rates of price growth are certainly what we've experienced this year. In fact, if you look at the MLS Home Price Index, or HPI, which estimates the price for benchmark or typical home types throughout the TREB market area, we saw an acceleration of growth into the double digits for single and semi-detached houses and into the high single digits for townhomes. The shortage of low-rise listings and the resulting acceleration in price growth was due, at least in part, to a continuation of a vicious circle whereby households considering selling their current home in order to buy another have decided against it because they feel they will not be able to find another home that meets their needs. Many of these households have opted to renovate their homes instead. Now, while the annual rate of price growth for condo apartments has not been as strong due to comparatively more supply resulting from many new project completions over the last couple of years, we have seen enough interest from buyers to support price growth above the rate of inflation. Now, while the MLS HPI provides us with the best indicator of market-based price growth, it is also important to consider the overall average price for the TREB market area. Right now, the average selling price is forecast to come in at $623,000 for calendar year 2015, and this is for all home types combined. Now, along with a record 100,000 sales this year, what this average price points to is a total dollar volume of over $62 billion this year. So that gives us a good picture of what to expect through the end of 2015. But at this point of the year, I know you're also going to be interested in what's in store for 2016. How the market will unfold next year will depend a lot upon two variables: the health of the regional economy in the GTA and the direction of borrowing costs. Because economic conditions and borrowing costs factor directly into home ownership affordability, it is important to remember at TREB, we measure affordability by estimating what share of average household income is dedicated to mortgage principal and interest, property taxes, and utilities. With an average price of $623,000 expected for calendar year 2015, that share of average household income is sitting at approximately 37%. Now, it is also important to remember that the average price isn't always representative of a typical home, such as those considered by the MLS HPI. The MLS HPI composite benchmark price at the end of September was $567,000. When we look at affordability from this standpoint, The share of household income dedicated to major housing payments dips below 35%. Now, where the share goes in 2016 depends partly on income growth and borrowing costs. So let's look at income growth first. Regional economic conditions in the GTA feed through into income and income growth. For most of this year, the unemployment rate in the GTA has been trending lower, which points to sustained or even accelerating income growth moving forward. At the same time, tighter labor market conditions also suggest more confidence on the part of consumers. Given that the consensus view is for renewed economic growth in 2016, it is reasonable to assume that local labor market conditions will remain a positive factor relating to housing demand. Now, on the flip side of the coin, however, is the notion that as the economy improves, the expectation for higher interest rates will also become a factor as the rate of inflation increases. Right now, the outlook for the 5-year Government of Canada bond, which gives us an idea of the direction of the 5-year fixed mortgage rate, is for a yield increase of somewhere between 25 and 50 basis points next year. This outlook is based on the forward rate calculated from the market for Canadian government securities. So it will cost more to borrow funds to purchase a home, which could impact households who sit right on the margin of affordability right now. So putting together these economic and financial considerations, what does this all mean for the number of sales in 2016 and the direction of price? So turning to sales first, I feel it is safe to say that the number of residential transactions reported through TREB's MLS system in 2016 will remain very high from an historic perspective. We should expect to see the number of deals range between 95,000 and 105,000 next year. If rates increase and we see less than expected growth in income, sales could dip closer to the 95,000 mark. Conversely, if the Canadian economy as a whole remains sluggish, but at the same time the GTA economy continues to outperform, we could see stronger local income growth and borrowing costs remain quite low, which would push sales to a new record of 105,000. Now, from the price perspective, we will see continued price growth above the rate of inflation in 2016. Expect the average price for calendar year 2016 to range between $655,000 and $670,000, representing an annual rate of increase between 5 and 7.5%, depending on how things unfold with economic and financial market conditions. Obviously, little movement in interest rates coupled with a well-performing regional economy could keep market conditions tight and push the rate of price growth to 7.5%. Some combination of higher rates and slower income growth could lead to a better supplied market, at least initially, and see more moderate rates of price growth next year. Now finally, looking beyond the short-term outlook, a final point to consider is one of government policy. We have seen in the past that changes to government policy in areas affecting the housing market can certainly change buyer behavior. This could certainly be the case moving forward if other Ontario municipalities, in addition to the City of Toronto, are given the ability to institute a municipal land transfer tax. This could certainly include all of the municipalities within TREB's primary market area. Now, third-party research looking at the MLTT experience in the City of Toronto has suggested that the onset of such a tax does change buyer behavior. It is conceivable that when faced with an additional substantial upfront payment at closing, some would-be buyers would move to the sidelines. This could have a negative impact on the market, with the number of transactions trending lower as more homeowners choose to undertake renovations rather than move. So as usual, there are a lot of moving parts when considering the GTA housing market, and it will be important to keep track of how things unfold. I look forward to speaking with you again in January with an update to this outlook. Thanks very much.
Brought to you by GTA Realtors.